It may seem difficult at first, but everything is difficult at first. Miyamoto Musashi, Japanese swordsman, master samurai. I love the Book of Five Rings. Now, let's jump into the charts today. Everything down across the board. The biggest down is, of course, Bitcoin. It moves the most of anything most days, up or down. We then see that the S&P 500, the NASDAQ 100, 20-year bonds, and gold, all of them down. And all of them actually in trading positions. What's so interesting, of the four, the big four, not Bitcoin, we don't have a derivative market on Bitcoin yet, do we? When you see that happen, you will know that Bitcoin has truly arrived. There are no options on Bitcoin yet. Let's talk about the S&P. What do we see going on there? Look at the price percent oscillator pulling away from the red signal line. Derivative oscillator gaining downward momentum. Looking nice. Again, weekly vertical crossover in effect, down 1.24%. Two-day chart. Price percent oscillator spiking over, derivative oscillator moving. First day of the latest two-day candle, moving down quite strongly after two spinning tops, a green one and then a red one, almost a doji, that last one. So we'll see what the market looks like on Friday. Price well below the weekly and the two-day trend line. Go to the half day. What do we see there? Well, we can adjust this two-day trend line a little bit and tag that in a little better for us. Did I say two-day? Half day. We see how strongly down in the morning, even stronger, bottoming way down in the afternoon. How many of you had jumped into a trade and did you reach your profit band when it popped? Did you do that? Don't know. Don't know what you set it at. Hope that you took that training we put out yesterday on profit and loss bands. That is an extremely good training, very popular. Hope that you enjoyed it. For subscribers, we have a training for you today, the secret of maximizing the Monday effect. What is that? Well, take the training and you will know. Very important for you to understand the Monday effect. Now, how do you get all these trainings? You go to chartingwealth.com, put in your name, email address. That list is never spam, never shared, and you will be on the daily email. You'll get these training videos that I'm talking about, plus the daily review you're listening to right now. And tomorrow at the close of the market on Friday, we'll give you the weekly review and forecast. All that stuff is free. Now, that's where we are on the S&P, bounding down in correction mode, which is good to see. And don't know what just happened to my charts. It looks like they just disappeared on me. Let's load that back up again. And you can watch in real time as this happens. And those charts will pop right back up for us and we will continue. There we go. Continue to push through them. Don't know what happened. That hasn't happened. In all the shows I've done, I've never had it go out like that. Maybe some type of Wi-Fi problem. That's where we are on the S&P. Let's go to the Qs. What do we see there? Start with a weekly. Similar to the S&P, price percent oscillator pulling away, derivative oscillator gaining downward momentum, strong down candle. Go to the two-day, spiking down. First day of the latest two-day candle, moving down well below the weekly and the two-day. Let's look at this half day. What do we see there? We see that we need to redraw our half-day trend line. Do you know how trend lines are supposed to be drawn? Bottom up, top down. That's the training I'm going to put at the end of today's video for you. I think I have two trainings from the past on trend lines, and I'm going to give that to you. I've said over and over, if there are only one thing I could have on a chart, trend line would be probably at the top of my list, maybe just under the price percent oscillator, but not too far under it. Trend lines are important. Those two trainings are going to be in today's video. Look for it. Now, we see both the Qs and the NASDAQ 100. I'm sorry, the Qs is the NASDAQ 100. The S&P and the NASDAQ 100, again, moving in the direction of that weekly vertical crossover. On Monday, you had your doubts, didn't you? Well, again, all things being equal, the market tends to move in the direction of the largest chart. What do we see? When we go to bonds, look at bonds. We had that 2-day recross back at the beginning of February. Has it done you righteous or not? Some of you popped out last week on that, but this week we continue to see things moving down. Hadn't hit the low of last week yet, but looking good. Price percent oscillator, derivative oscillator heading down. Remember, you don't stay in forever. That's why you have to know where to set your profit bands and your loss bands if things don't go in the right direction. But we look at the half-day chart, the 2-day chart. We can see the first day of this latest 2-day candle continuing to move down. Hasn't hit the low yet. Price percent oscillator losing a little bit of that downward momentum. And we see the derivative oscillator losing momentum. We look at the half-day, close but no cigar on crossing over, going down, derivative oscillator losing momentum but still positive. See if we plumb that depth again on bonds. That's where we are. Now we go to gold. We also had that 2-day recross on gold back in early to mid-January. I want to say it was the 9th. We'll look at that in a minute. But we see the price percent oscillator spiking down, derivative oscillator price continuing to move down to a lower low throughout the course of the week. Look at the 2-day. And again, we can see first day, this latest 2-day candle, nice low, down about 1% for the day. And that 2-day crossover, I was wrong, it was the 14th. That was Thursday the 14th. And you remember it was down the next 2 days and then sort of ticked along up a little bit. Scary, but then of course resumed that downward march with a few breaks in between. But look at that. Price percent oscillator spiking down, derivative oscillator half day. We can see where down in the morning, further down in the afternoon, sweet. Remember, you don't stay in these trades forever. You need to take profits at some point. And when you take a profit, close that trade, take your virtual profit, and then be done with it. Don't just beat yourself up if you missed more of a move. When you capture what it is you think is reasonable in capturing, do that. You can sure look and analyze later what you've done. That's the reason we fill out our trade worksheets. They allow us to do that analysis. Now we look at Bitcoin. Bitcoin down 2.25%. We've talked about the weakening there. You can see we haven't had a crossover yet going down. No weekly vertical crossover yet, but that derivative oscillator has been negative since the beginning of February. Price percent oscillator moving down, not yet crossed the red signal line. Go to the 2-day. It, of course, did cross over. We called that when it happened. Derivative oscillator, the 2 days later, also crossed over, going down. Price percent oscillator pulling away from the red signal line. Bitcoin really on that 2-day chart, as we look at it, we can see sliding sideways, but it is down. What about the half day? We can see where popped down in the morning on Tuesday, the 23rd of February, fairly strong. It popped down that day. Then sort of rolled sideways and up a little bit the next 2 days, then popped down strong on Friday the 26th, and really has been sliding sideways, trying to inch up a little bit. We do see 2 red down candles for the day on Thursday. And that price percent oscillator, not enough energy to cross over, still ticking down. That derivative oscillator losing downward momentum. That is where we are. And again, things moving in the directions that we want to see them move. Not that we want to see markets crash, bonds go down, gold go down, but we want to accurately track them. There are opportunities to go short on all, there have been, on all of these charts. We've been talking about them. They've been laid before you. Your key is not really the jumping in point. We give you the jumping in point. We make that super easy. Those of you who've read the book, studied with us, you hear me talking about that, you know. It's at the close of the 2-day candle when you have a 2-day recross. It's the close of the weekly candle when you have a weekly vertical crossover going down. The real key in our method is knowing how to maximize the price or minimize the loss if the trade doesn't work. Now again, the majority of these trades work and they work sweetly. So you've got to establish those rules. That's what the training is so important about. You learn how to establish those rules by practicing every day, reading the book, following the trainings, and of course, spending the time. It's the time under your legs. If you're learning how to ski, you got to put in the mileage. You want to be a distance runner, you got to run the distance. You've got to do the training. It's not a lot, 10 to 15 minutes a day. I urge you to do it. You want to know more about us? Of course, I encourage you to read the book, encourage you to sign up and subscribe for free. And just do that at the beginning. Just do that and follow us, and then start printing out for free those PDFs in your show notes every day. The daily market worksheet once a week when the close of the market happens on Friday, the weekly market worksheet. When you do a practice trade, the trade worksheet, it will come. You just have to do the work. God bless. All the best from the whole team at Charting Wealth World Headquarters.